Jeff, Zach, thanks for joining me.
Hey,
Hey,
Steve.
Steve.
Hey, we are talking again about real estate debt, the banking system. This is something we've been kind of covering for a while, and it kind of fits in what we've been talking about, where there are some non-performing loans in certain parts of commercial real estate, not the whole sector, and there might be the potential for some smaller regional banks with over concentration in this to possibly have some issues. And like I said, that we're starting to see some data coming out. At large banks, the delinquency rate for office loans, that's gone up to about 11%. Um, some of you guys just thought on some of these trends and some of the data we're starting to see, kind of pointing to things we've been talking about.
Well, tying back to our episode last week, we were talking about that it was extended pretend, where we're going to extend loans to avoid delinquencies that people might not be able to pay. And we said last week that delinquencies were going to probably increase and start piling up. This week we have an article that's kind of reinforcing that at this moment, and it's not broad across all real estate. It's kind of specific at this point, but I think you might see a broadening of it as it continues. The course correction that I think everyone is really banking on, I guess pun intended, is that a Republic in Washington will be more business friendly. We've talked about that before as well. Business friendly policies and tactics have spurred economic growth. It should also kind of relieve some of the banking pressure where interest rates might not be as big of a concern. They might come down, which could lead to more economic viability in terms of refinances where banks and delinquency rates would decline. But at this moment, the way things are, I don't think that this is a surprise for everything that we've been talking about week in and week out.
Yeah, I mean, one of the things we've seen recently is regional and community banks, which do typically have a higher proportion in commercial real estate loans, seeing the delinquency rates rise in the first half of 2024. Jeff, you're the one here with the most experience in terms of banks and debt and evaluating credit risk and whatnot from the banking side of things. Kind of your thoughts on what we're seeing.
Well, I think this will be probably a little bit of a test, so to speak, to see whether or not any of the impacts of Dodd-Frank and how people handle and manage loans and loan portfolios, or specifically banks handle them, will actually come to provide some positive realities from it, or see if it was just another government-funded project that just made things a lot more difficult to deal with. I think in reality, a lot of people kind of misunderstand and think banks are, especially regional banks, where they do have a heavier portfolio of commercial real estate. Generally they don't borrow at as cheap of costs as some of the larger, and I mean much larger banks do. So their costs are higher, their rates are higher. So, they're not as rate, I guess, impacted, so to speak. They are, but it's not like some of the other banks, because they're really targeting, a select few. And generally, I think in reality, a lot of this will be kind of interesting to see how banks will, work around that, kind of extend and pretend type discussion we had last week. I don't know if they're, I don't know. I'll just put it that way.
Yeah, I suspect we're going to kind of potentially see what we've seen before. Not a major banking issue, not a major real estate issue, but some individual banks that aren't in that too big not to fail category. Few of those that have concentrated issues to a few places. We've seen some urban cores with some office properties have some problems. There's been some multifam operators that just really, even if it was a quality property, it wasn't a quality business model that was exposed to too much interest rate risk. I think we absolutely could see some smaller banks run into some problems here. But so far, nobody's seriously talking about a big systemic risk event like 2008. But we'll keep following this. Thanks for the insights, guys.
Thanks, Steve.
Thanks, Steve.
Hey, if you enjoyed the video, give us a thumbs up. Subscribe if you haven't. Visit our website, selectfincap.com. Get on our newsletter, free newsletter, for weekly updates in commercial real estate and some of the exclusive investment opportunities we're looking at. And give us a thumbs up. Thanks a lot, guys.
Thanks,
Yeah.
Steve.